Last time we met Greg and Kate, a couple with very different approaches to handling money. They've got a goal of $5 million in assets to retire on.
So our wealth acquisition comes from the friends, the family, the people around us, and the who we know and how we've actually come to know. So it is cultural, it is part of our fabric of a society of how we actually come to be. And that means that what we do is we share how we did it, others then mimic that, move forward. So we end up with this situation where 70% of the wealth is invested into Australia.
Our expert panel of money masters weighs in on how a shift in investing thinking could help them reach that goal. Hello and welcome back to the Secrets of the Money Masters, where we're solving real-life Australians' money problems. And today we're talking about Kate and Greg, a couple in their late-ish 40s who've got ambitious goals to retire on $5 million and leave their 3 kids a nest egg. They've got a bit of work to do, but it's highly likely that they will achieve their goal if they listen to our experts. And today I'm joined by Bryce Doherty from UBS Asset Management and Gabin Peacock from CBRE Clarion. Welcome to you both, and thanks for helping solve Kate and Greg's challenges.
Thanks for having us.
Well, let's talk about this. You know, they want to retire on 250 grand a year. Greg's got 15 years to work. Kate's just going back to work, which she seems very happy about. They're not going to do that by putting the money in the bank. With interest rates the way they are, that's going nowhere. So, you know, Bryce, they know Australian equities and they know property. What do you think of their chances?
Well, I think the first thing is that at least they've got a plan, at least they've got a target, at least they're thinking about their retirement being an income rather than just a lump sum when they do decide to retire. So that's a good start. Like all Australians, they're in love with, you know, buying property and trying to make money that way and having that as a large asset, and that's fine, nothing wrong with that. But as you say, interest rates are at all-time lows here in Australia. So the old idea of just being able to put your money in the bank and term deposits and so on becomes a bit difficult if you're trying to build up a nest egg that's big enough to give you that kind of income in retirement.
Yeah, exactly. And look, Gabin, for CBRE Clarion, if I said to Kate and Greg, hey, Gavin's got a great idea, invest in data centres, I think they'd give me the look of, what? Talk to me about where the opportunity is.
Well, data's really interesting. When you think about it, it's actually one of the fastest growing commodities in the globe at the moment. 90% of the data that's currently existing in the world today has been created in the last 2 years.
Mainly by my teenagers.
That's right.
But, you know.
And it's obviously very relevant for Kate and Greg when they're having teenagers in the next couple of years. And obviously that creates a lot of opportunity. We're moving away from watching movies on DVDs to watching them now and streaming them straight onto our phones. And obviously we're moving from storing our photos and our files on PCs to now storing them up in the cloud. So it's that proliferation of data usage is creating a lot of opportunities.
So you're going overseas with UBS and finding these opportunities like environmental opportunities, data centers, infrastructure, and that's how you're making money.
There's a lot of companies across the globe that are really investing in that asset class and are seeing very strong growth fundamentals out of that industry.
So 83% of people in Australia who don't own a house are worried they'll never be able to afford to, which is actually a pretty reasonable worry because housing affordability is a huge issue. Bryce, should they even be worried? Should we just become a nation that accepts renting as the way forward and become investors?
I think it's fairly difficult to say that they shouldn't be worried because I think people naturally are going to be worried. Owning a home in Australia is just really built into our culture here.
It is, isn't it?
So one of the things that a lot of younger people, more so than Kate and Greg, who are already in the property market, could be thinking about is what other things can I invest in? Rather than just putting money in the bank and getting that tiny interest rates that you get today, what are the other things I could invest in that are going to give me an interest rate or a return that's similar to what I would get in the property market? And whether it's listed property or whether it's listed infrastructure, which is the asset class that holds things such as data centers, there are a lot of different opportunities for people to grow their money faster than just putting it in the bank. So getting money offshore into those other opportunities is a way that an advisor can help clients enhance the returns that they're getting.
Yeah, okay. And Gabin, if Kate and Greg did say, okay, maybe we won't buy another investment property, we'll put it into real estate type assets that are global, what sort of returns could they expect from that?
I think the attraction of the listed property market from a global perspective is that they're able to get the same type of property exposure, and the total returns over time have actually been similar, if not superior, to what you get from residential property. But you're getting
even with
more,
that massive growth in Australian residential
that's
property.
correct, yeah.
Right,
But you're getting much more diversity. You get the same the same with total return, but you also get that dividend yield coming through on a regular basis. But
And they're living on dividends. They're paying for their
yield,
kids'
it's useful for them.
education of
Yep.
that. So
But on top of that, you get the diversification. So you're not just exposed to one single
one
asset.
thing.
You're getting exposure to a variety of property classes. Infrastructure classes, we invest in that asset class. And you also, as a result, you're getting much more diversification if something goes wrong within your individual suburb that you're investing in.
Okay. All right. So if Kate and Greg were to walk in the room now and say, we don't think we're going to make our $5 million goal, just buying another house and keeping our Australian shares, what's the first thing they should do?
Well, I think the first thing that anyone should do is talk to a financial advisor to work out whether they're on track to reach their goals. They have mentioned they think they might not be on track, but I actually think they've done a pretty good start in having a plan, starting with some shares, understanding they're paying down their properties and so on that they own. So they need to have a conversation with a financial advisor. And I would suggest that most financial advisors' first question to them would be around their spending habits and their budget habits, as well as their savings habits. And then looking at their portfolio around that idea of diversification that Gavin's already mentioned. And if you're only investing in Australia, that automatically limits your opportunities, and it also concentrates your risk around just one market.
Yep.
I think I'd add to that. I mean, the Australian market is currently around 3% of the global share market. So if you're just investing in Australian shares, you're missing out on around 97% of opportunities that are available around the globe.
Well, thank you both very much for joining me and talking about Kate and Greg. I know they're going to get a lot of value from having people who do this every day of the week, run businesses, have a look at their lives. So thank you both very much.
Thanks very much for having us.
That's all for this segment. Coming up next, we talk financial advice. Want to let go of old thinking and discover wealth reinvented? Download our exclusive ebook, A Guide to Finding Returns in the New Investor Reality. Next time, our expert panel discusses our behavioural psychologists concerned about the bias Greg and Kate are showing on their investment strategy.